Welcome to Investor Web, the channel where your financial insights broaden with every view. Here, we're dedicated to offering you top-tier investment advice and insights, helping you navigate the vast ocean of investing. Today, we're delving into a particularly exciting topic: the 10 valuable lessons learned after your first big win. These insights are crucial for anyone looking to sustain and build upon their initial success in the investment world. Stay tuned as we dive into these transformative lessons that every investor should know. Our first lesson starts with humility. After a significant win, it's tempting to feel invincible, as if the Midas touch graces every decision you make. But history teaches us a vital lesson through the stories of those who've truly succeeded in the long run. Take, for example, the legendary investor Warren Buffett. Despite his immense success, Buffett is renowned for his unassuming lifestyle and his persistent quest for knowledge, regardless of his financial status or achievements. He famously lives in a modest home he bought decades ago and continues to drive himself to work. It's this humility that has allowed him to remain focused and make wise investment choices year after year. This isn't just about avoiding arrogance, it's about maintaining a mindset that is open to learning and growth. Every win offers a lesson, just as every setback does. Staying humble keeps your mind clear and your strategies sharp. Remember, a true winner stays grounded. Next, let's talk about the power of reinvestment. Imagine this: you've just had your first big financial win. Let's say a well-chosen investment yielded a substantial return. Now, you're faced with a choice: pocket the profits or reinvest them. Here's where the magic of compounding comes into play. Consider a hypothetical scenario. If you reinvest those earnings, you're not just maintaining your investment level, you're increasing it. This means your potential returns for the next cycle could be significantly higher, assuming the same rate of return. It's like planting a seed from a fruitful tree, only to harvest even more as seasons pass. Now visualize reinvesting not just once, but continually over years. Each reinvestment builds upon the last, growing your wealth exponentially. Just as a snowball grows larger as it rolls down a hill, your investments expand as they accumulate more and more returns. Compounding is an investor's best friend. Lesson 3 is all about diversification. Imagine for a moment that all your investments are in one sector, say technology. It's all booming, the stocks are soaring, and then suddenly the market takes a nosedive. Those who put all their eggs in one basket find their fortunes turning just as quickly. Now consider the tale of Eleanor, a seasoned investor. In her early days, she spread her investments across various sectors: technology, healthcare, and renewable energy. When the tech bubble burst in the early 2000s, while many floundered, Eleanor's portfolio remained robust. Her investments in healthcare and renewable energy not only cushioned the blow, but actually grew during this period. This anecdote underscores the critical importance of diversification. It's not just about spreading risk, but also about capturing opportunities across a broad spectrum. Diversification isn't just a safety net, it's a strategic approach to sustainable growth. So when you plan your next investment move, remember to spread your wings. Diversify, but do it wisely. Mistakes are inevitable, learning from them is optional. In the realm of investing, mistakes not only test our resolve, but also enrich our understanding. Consider the tale of a seasoned investor who once made a sizable bet on a promising technology startup. Despite thorough research, the startup faltered due to unforeseen regulatory changes, leading to significant losses. Rather than retreat, the investor analyzed the misstep. He realized the importance of considering external factors like regulation more deeply. This insight sharpened his investment strategy, making him more adept at navigating the complexities of the market. Mistakes, you see, are not just missteps, they are illuminating. They strip away the illusion of perfection and provide a clear path to improvement. Each error, each loss, holds a lesson ripe for the learning, provided we are willing to listen and adapt. So, as we move forward in our investment journey, let us embrace our blunders. Analyze them, learn from them, and above all, grow from them. Turn every mistake into a stepping stone. Now let's master our emotions. Investing can often feel like riding a roller coaster. Ups and downs are part and parcel of the journey. However, the key to not only surviving but thriving in this volatile environment is emotional discipline. It's easy to get swept up in the euphoria of a financial windfall or the despair of a sudden loss, but these emotions can cloud judgment and lead to rash decisions. Take, for example, the story of a seasoned investor who, during a market high, let excitement override his better judgment. He invested heavily in what seemed like a booming sector only to find out it was a bubble about to burst. The result? A significant loss that could have been mitigated had he maintained a level-headed approach and adhered to his long-term strategy. This underscores a critical lesson. The most successful investors aren't those who ride the emotional waves, but those who sail steadily, guided by research and rational decision-making. Invest with logic, not emotions. Information is power. In the ever-evolving world of investment, staying ahead isn't just about the capital you invest, but also about the information you gather. The landscape of markets shifts with the winds of global events, technological advancements, and regulatory changes. Thus, the astute investor always keeps a finger on the pulse of these dynamics. How, you might ask, can one stay consistently informed? Firstly, consider subscribing to leading financial news outlets. These platforms offer a wealth of real-time data and analyses that are indispensable. Furthermore, tuning into specialized podcasts can provide deeper insights and varied perspectives that are crucial for a well-rounded understanding. Additionally, attending seminars and workshops not only broadens your knowledge but also connects you with like-minded individuals and experts. Networking is, after all, a key aspect of staying informed, as it opens doors to discussions and opportunities that might not be available through public channels. The well-informed investor is often the most successful. What are your investment goals? This question isn't just a casual icebreaker among investors, it's the cornerstone of successful investing. Setting clear, achievable goals isn't just about stating, "I want to make money." It involves a deep dive into what you specifically want to achieve, whether it's retiring by 55, funding a startup, or buying a second home. Clear goals act as a roadmap for your investment journey. Without them, it's easy to get lost in the sea of opportunities, or worse, make impulsive decisions that don't align with your long-term objectives. Setting these goals gives you a target to aim for and helps measure your progress along the way. Moreover, having well-defined goals can tremendously boost your motivation. Every investment made and every bit of progress becomes a step closer to something tangible, not just a figure in a bank account. As you consider your investment strategy, remember to tailor your goals to be specific, measurable, achievable, relevant, and time-bound. This smart approach ensures that your goals are not just dreams, but achievable milestones. Define your success to achieve it. No man is an island, especially in investing. When the stakes are high and the markets are fluctuating, the counsel of seasoned financial advisors or investment experts can be invaluable. These professionals bring a wealth of experience and a deep understanding of market dynamics that can significantly alter the trajectory of your investment journey. Consider the case of a novice investor who, after a substantial initial win, chose to consult a financial expert. This decision led them to strategies that not only safeguarded their earnings, but also multiplied them. The expert's insights into market trends and investment vehicles equipped the investor with the tools needed for sustained success, demonstrating how pivotal professional advice can be. It's essential to recognize that investing isn't just about making smart choices, it's about making informed choices. By consulting experts, you gain access to insights and strategies that might not be apparent through solo research or personal experience. Leverage expertise to maximize your potential. Patience is not just a virtue, it's a strategy. In the whirlwind of the investment world, where fortunes seem to be made and lost overnight, the true power of patience is often underestimated. Let's delve into a compelling case study that underscores the significance of this approach. Consider the journey of an investor who, during the early 2000s, chose to invest in a small tech startup. While many were quick to sell their shares during the initial bumps, this investor held on. Over the years, as the company innovated and expanded, those shares that once seemed stagnant grew exponentially in value. This story teaches a crucial lesson. The market rewards those who are steadfast. A hasty decision can often lead to missed opportunities. Remember, it's not just about surviving the lows, but also about being present and ready for the highs. Investing, in essence, is not a race, it's a marathon. Strategies develop, opportunities emerge, and the landscape evolves. Good things come to those who wait. Finally, don't forget to celebrate your wins. In the whirlwind of targets and objectives, it's crucial to pause and acknowledge the milestones you've reached. Celebrating your wins isn't just about throwing a party, it's a vital component of your journey towards sustained success. It reinforces the positive behaviors that got you to this point and sets a precedent for future achievements. Think of it as setting a rhythm to your endeavor's heartbeat. Each success, no matter its size, deserves its moment of recognition. This could be as simple as a team lunch, a personal day off, or even public acknowledgement within your company or network. These celebrations forge stronger bonds within teams, boost morale, and keep everyone motivated for upcoming challenges. Moreover, taking time to celebrate helps to mentally and emotionally catalog your success, making it a reference point for future aspirations. It's a way of saying, yes, I can do this, and pushing forward with renewed vigor and confidence. Celebrate your achievements, but always set the next goal. As we wrap up today's journey through these 10 pivotal lessons, let's briefly revisit humility, reinvesting profits, diversification, learning from mistakes, emotional control, staying informed, goal setting, consulting experts, patience, and celebrating successes. Each is a cornerstone in building a robust investment strategy. Embrace these lessons, weave them into your investment practices, and watch as your portfolio transforms. Thank you for watching. Subscribe to InvestorWeb for more insightful content, and here's to your next big win.